This is the luxury world. Get inspired with us today and tomorrow. As we find ourselves in the latter part of the year, it is worth examining how the secondary watch market fared during the initial half of 2023. What was the performance of the secondary watch market in the first half of 2023? In this video brought to you by the luxury world, we will give you 5 key insights that shed light on the developments in the current year's watch market. We trust that these findings will captivate your interest and hold significance for you. If you have not subscribed to our channel yet, we highly recommend doing so now to stay informed about our future video releases. First, let us talk about the big 3 watch brands that dominate the market. We are delving into the realm of Rolex, Patek Philippe, and Audemars Piguet, which collectively form a substantial portion of transaction value within the secondary watch market. When considering the primary market as a reference point for market share analysis, these very brands contribute to about 39% of the primary watch market. Transitioning to the secondary market, the story takes a more pronounced turn. These 3 brands combine to command 67% of the secondary market's transaction value. These brands are already significant players in the primary market and offer valuable insights into the trajectory of the watch industry through their new product releases. However, their impact is amplified within the secondary market, as they stand out as the top preferences for collectors and dealers alike. Their prominence is undeniable, to the point that if you cast your gaze beyond these brands, you will find them reigning supreme in the watch industry landscape. Omega is another major player that readily comes to mind. The brand produces a substantial quantity of luxury-priced watches, often reaching the hundreds of thousands. When we consider the market indices we calculate and publish for the Rolex Daytona and compare with the Omega Index encompassing the entirety of the Omega brand, where an interesting comparison emerges. Surprisingly, Daytona on its own surpasses the entire Omega brand in cumulative transaction value within the secondary market. This comparison serves as an additional point of reference, underscoring the immense scale of these brands within the secondary market landscape. Moving on, let us talk about the supply. The aggregate supply within the secondary market has retained historically important levels. Across 2021, there is a discernible trend of inventory accumulation, culminating in a sharp spike close to December 2031, with inventory peaking 70% higher than its year start position. The pinnacle of the overall market index occurred in early March 2022, coinciding with a phase where inventory persisted in its upward trajectory, consistently increasing over the ensuing months until early 2023, nearly doubling its starting point in 2021. Although there has been a subsequent decline, the overarching trend remains cumulative. However, this surplus inventory poses a challenge. Even with stable demand, the indications suggest demand remained consistent. Increased supply introduces consumer choices, generating downward pressure on prices. This dynamic has unfurled throughout 2023. After talking about the supply, we may now proceed with the highly sought-after and prominently anticipated models. Watches persist in being traded at prices above their retail values. Let us delve into some prominent examples, beginning with Rolex, namely the Daytona and the Submariner, including the notable 126610 liter, often referred to as the Starbucks variant. While one of these models has been discontinued, the other remains in production. Both, however, exhibit substantial value retention, consistently trading well above their original retail prices. Another instance is the 116500, which ceased production a few months ago. Despite its discontinuation, it has garnered an approximately 30% market performance increase over the last 3 years. Shifting focus to Patek Philippe, the Aquanaut 5164, which is a world timer mode. It has seen a remarkable appreciation of 100% in its value over the past 3 years, currently trading about 70% above its retail value. As for Audemars Piguet, the Royal Oak 15510 in steel boasts a 57% trading value above retail. Meanwhile, Vacheron Constantin, with a more modest 17% above retail trading value, has still managed to achieve a significant market performance increase of approximately 76% over the last 3 years, despite the market decline experienced by all the featured watches in the past year. Retail price increases have negatively impacted value retention. In addition to the ongoing trend of market prices declining since the past year, retail prices have surged amid an inflationary environment, particularly notable in regions like the US and the UK. This trend is reflected among several major brands. For instance, Rolex and Patek Philippe were among the early adopters of this strategy, followed by others such as Omega, Cartier, and Vacheron Constantin. albeit a bit later in the year. The tactic of increasing retail prices in the face of declining market prices exerts downward pressure on value retention. So, when considering value retention figures, it is crucial to recognize this context as a significant factor. However, retail prices do not solely move upward, they can also decrease. An unexpected occurrence is Audemars Piguet's decision to lower the retail prices for numerous watches in their catalog during 2023. A prime example is the Code 1159 self-winding chronograph in white gold with a blue fume dial. A comparison between January 2022 and 2023 highlights a substantial price drop from $54,100 to $48,200. This represents the most significant price reduction found within AP's current production catalog. This move is surprising, especially for a brand of AP's stature. It raises the question of whether other brands might adopt a similar approach in response to market conditions. It remains intriguing to observe whether this trend will continue, potentially reflecting broader market behavior or simply constituting an anomaly. Finally, let us now talk about the market decline. The market continues to experience a downward trajectory. The timeline under scrutiny spans from the beginning of January 2023 to early August, illustrating how indexes for the overall market, as well as for Rolex, Patek Philippe, Audemars Piguet, and Omega, have performed year to date. The overarching market index has seen a decline of 6.8%. However, the scenario is not uniform across brands. AP's value is down by 11%. Patek Philippe has declined by almost 8%, and although Rolex witnessed a mild resurgence during watches and wonders due to the buzz around discontinued references, this boost eventually faded, leaving its long-term trend negative. Despite Omega showing some appreciation at the beginning of the year, it has reverted to its starting point. This trend is not isolated to just major brands, it is pervasive and extends beyond. The overall market index provides context, showing a decline of about 7%. Varied brands have reacted to market conditions in diverse ways. While some brands have struggled with declines, others have managed to maintain relative stability or experience modest growth. Notably, Bulgari and Girard-Perregaux have faced their unique trajectories. Curiously, Tudor, over the past 2 years, has faced the most significant challenges, as discussed in a recent video, diving deep into the dynamics affecting their value retention. The watch market is influenced by numerous factors including brand popularity, model releases, economic conditions, and consumer preferences. To obtain the most up-to-date information on the current watch market breakdown, including brand performance, trends, and market share, we always recommend referring to industry reports, market research, and reputable watch market analysis sources on various platforms online, including watching informative videos like this. Remember that watch market analysis is a complex and dynamic process. Combining these factors and continuously staying updated on industry developments will help you make well-informed decisions and navigate the evolving landscape effectively. What are your thoughts on the watch market analysis we shared in this video? Please feel free to share your thoughts in the comments section about other topics you can recommend. If you found the video engaging and informative, we would appreciate your feedback in the comments and your support by subscribing to our channel and giving us a thumbs up. Thank you for tuning in to Luxury World, and we are eagerly looking forward to your participation in our upcoming videos.